Microsoft Fiscal Year 2025 Third Quarter Earnings Call Summary Introduction. This summary provides a detailed overview of Microsoft's Fiscal Year 2025 Third Quarter Earnings Call, focusing on key financial metrics, management's outlook, risk factors, and significant highlights and lowlights. CEO Satya Nadella's key statements. Satya Nadella highlighted a record quarter driven by the continued strength of Microsoft Cloud, which surpassed $42 billion in revenue, up 22% in constant currency. He emphasized that cloud and AI are the essential inputs for every business to expand output, reduce costs, and accelerate growth. Nadella showcased significant advancements in infrastructure, expanding data center capacity globally, optimizing efficiency through hardware and software, and reducing costs per token. Data and analytics, deep integration of AI with the data stack, accelerated growth in PostgreSQL and Cosmos DB, and significant adoption of Microsoft Fabric with over 21,000 paid customers. AI platform and tools, Foundry usage by over 70,000 enterprises, processing over 100 trillion tokens, and the expansion of the Phi family of SLMs. Developer tools, evolving GitHub Copilot into a peer programmer with agent mode and reaching over 15 million users. Future of work, strong adoption of Microsoft 365 Copilot, with hundreds of thousands of customers and growing deal sizes, and introducing agents for specific roles. Business applications, Dynamics 365 gaining market share, and Dragon Copilot off to a fast start in healthcare. Windows Copilot Plus, PCs offering enhanced performance and battery life, with exclusive AI experiences. Security, significant progress in the Secure Future initiative, with Security Copilot agents assisting defenders and new capabilities in Defender, Intra, and Purview. Consumer businesses, double-digit growth in LinkedIn membership, increased time spent on video, and growing AI adoption for skill development and job searching. Advertising revenue across businesses surpassed $20 billion over the past 12 months. Gaming, transforming the business for margin expansion, top publisher by pre-orders on Xbox and PlayStation, and cloud gaming setting new records. Nadella concluded by stating Microsoft is rapidly innovating to expand its opportunity across consumer and commercial businesses, and encouraged tuning into the upcoming Build conference for insights on their AI platform for developers. CFO Amy Hood's key statements. Amy Hood reported total revenue of $70.1 billion, up 13%, 15% in constant currency, exceeding expectations. She highlighted gross margin dollars increased 11%, 13% in constant currency, and operating income increased 16%, 19% in constant currency, with earnings per share of $3.46, up 18%, 19% in constant currency. Key financial highlights and outlook from Amy Hood. Strong demand. Continued strong demand for cloud and AI offerings, with AI business revenue above expectations. Commercial bookings increased 18%, 17% in constant currency, significantly ahead of expectations, driven by an Azure commitment from OpenAI and consistent execution. Commercial remaining performance obligation increased to $315 billion, up 34%, 33% in constant currency, with substantial growth in obligations beyond the next 12 months. Microsoft Cloud revenue of $42.4 billion, ahead of expectations, growing 20%, 22% in constant currency. Gross margin percentage was 69%, down 3 points year-over-year due to scaling AI infrastructure. Company gross margin, also 69%, down 1 point year-over-year, driven by AI infrastructure scaling. Operating expenses increased 2%, 3% in constant currency, lower than expected due to cost efficiencies and investments shifting to Q4. Operating margins increased 1 point year-over-year to 46%, better than expected, with a focus on agile teams and reduced layers. Segment performance, productivity and business processes. Revenue $29.9 billion, up 10%, 13% constant currency, ahead of expectations, driven by LinkedIn, M365 Commercial, and M365 Consumer. M365 Commercial Cloud revenue grew 12%, 15% constant currency. Intelligent Cloud revenue $26.8 billion, up 21%, 22% constant currency, ahead of expectations, driven by Azure. Azure and other cloud services grew 33%, 35% constant currency, including 16 points from AI services. Non-AI services saw accelerated growth. More personal computing. Revenue $13.4 billion, up 6%, 7% constant currency, ahead of expectations, with better-than-expected results across Windows OEM, devices, search, news advertising, and gaming. Capital expenditures. $21.4 billion, slightly lower than expected. Cash flow from operations was $37 billion, up 16%. Free cash flow was $20.3 billion. Shareholder returns. $9.7 billion returned through dividends and share repurchases, up 15% year-over-year. Q4 outlook. Total revenue expected to grow by 1 point due to FX. Microsoft Cloud gross margin approximately 67%, down year-over-year due to AI infrastructure scaling. Capital expenditures expected to increase sequentially in Q4. Productivity and business processes. Revenue expected $32.05 billion to $32.35 billion, 11% to 12% constant currency growth. M365 Commercial Cloud revenue growth around 14%, constant currency. Intelligent Cloud. Revenue expected $28.75 billion to $29.05 billion, 20% to 22% constant currency growth. Azure revenue growth 34% to 35%, constant currency. AI capacity constraints expected beyond June. More personal computing. Revenue $12.35 billion to $12.85 billion. Windows OEM and devices revenue declining mid to high single digits. Search and news advertising XTC revenue growth high teens. Gaming revenue mid-single digits. Full year FY25 operating margins expected to be up slightly year-over-year. Q4 effective tax rate approximately 19%. Outlook for next fiscal year. FY2026 capital expenditures expected to grow at a lower rate than FY2025, with a greater mix of short-lived assets. Key financial metrics. Revenue $70.1 billion, up 13% year-over-year, 15% constant currency. Microsoft Cloud revenue $42.4 billion, up 20% year-over-year, 22% constant currency. Gross margin percentage, company 69%, down 1 point year-over-year. Operating income increased 16%, 19% constant currency. Earnings per share, EPS $3.46, up 18% year-over-year, 19% constant currency. Commercial bookings increased 18%, 17% constant currency. Commercial remaining performance obligation, RPO $315 billion, up 34% year-over-year, 33% constant currency. Capital expenditures $21.4 billion. Cash flow from operations $37 billion, up 16%. Free cash flow $20.3 billion. Significant risk factors. Data center strategy and GPU supply. While demand for AI is strong, managing data center buildouts, leasing, and securing sufficient GPU supply remains a focus. Microsoft anticipates some AI capacity constraints due to demand growing faster than supply. FX fluctuations. Currency exchange rate movements can impact reported revenue growth. Windows OEM inventory levels. Elevated inventory levels in the Windows OEM business present some variability in guidance. Timing of large Azure contracts. The timing of large, long-term Azure contracts can lead to quarterly volatility in bookings growth. Highlights. Record revenue and profitability. Achieved record revenue and strong profit growth, exceeding expectations. Exceptional Microsoft Cloud performance. Surpassing $42 billion in revenue, with robust double-digit growth. AI as a key growth driver. AI services are significantly contributing to Azure's growth, and AI integration across products is driving new adoption and use cases. Accelerating cloud migrations. Customers across industries are increasing their adoption of Azure. Strong demand for developer tools. GitHub Copilot and other developer tools are seeing significant user growth and adoption. Growth in productivity and business processes, driven by strong performance in Microsoft 365 and LinkedIn. Resilient more personal computing segment, outperforming expectations with contributions from Windows OEM, search advertising, and gaming. Effective cost management. Operating expenses grew slower than revenue, leading to improved operating margins. Commitment to shareholder returns. Increased shareholder returns through dividends and buybacks. Positive AI efficiency gains. Software advancements are driving significant efficiency improvements, making AI more cost-effective. Lowlights. AI infrastructure scaling impact on margins. Scaling AI infrastructure has led to a year-over-year decrease in gross margin percentage for both Microsoft Cloud and the overall company. On-premises server decline. Continued shift to cloud offerings results in a decline in the on-premises server business. Talent solutions impacted by hiring market. LinkedIn's talent solutions business is affected by weakness in the hiring market. AI capacity constraints expected. Microsoft anticipates some AI capacity limitations in the near future. Overall summary. Microsoft delivered a strong and record-breaking third quarter for fiscal year 2025, demonstrating exceptional growth driven by the Microsoft Cloud and the pervasive integration of AI. Revenue and profits significantly exceeded expectations, fueled by robust demand across all segments, particularly in Azure and AI services. Management expressed confidence in continued growth, with a clear strategy to invest in AI infrastructure and innovation. While scaling AI has impacted margins, the company is focused on long-term capital efficiency through software advancements. Key risks revolve around managing the pace of data center expansion and AI capacity, but Microsoft appears well-positioned to navigate these challenges and capitalize on the ongoing cloud and AI transformation.